Hi friends, so the dollar is trash. And I am not alone in this. There are countless of people out there right now who thinks that the dollar is going to zero. Why is the dollar going to zero? And how can people like us, retail traders, retail investors, how can we maneuver this market and how can we take advantage of everything that we have, every single asset class to protect whatever little wealth that we have accumulated this whole time? First of all, the US has been printing way too much money in the past few years. And the best part is that they know it. So during the Asian financial crisis, the US and European banks decided to walk in and say, don't print money. And that was smart because what happened was Asia went into a recession and they eventually recovered from it. But it is a very hard principle. So this time, Europe and the US have both printed their way all their problems. For now. Look, I don't think the dollar is going anywhere anytime soon, but I do know that inflation is coming up and fast. Having the US as the world reserve currency allows it to print its way out of problems realistically because every other country in the world would absorb all the excess dollars. So inflation cannot just be attributed to the printing of money alone. In fact, inflation right now is really due to geopolitical reasons. So our oil prices, our wheat, our corn, all of these things are going to skyrocket. This is going to lead to a cycle of people spending more money, and when people start spending more money, then the velocity of money increases, and then that drives up inflation naturally. So people will get afraid and they will decide to spend more because if I don't spend today, it's going to be worth less tomorrow. So they will keep spending the money and inflation will get out of hand. Of course, that is worst case scenario, but we can already see that with gas prices. People are no longer going to the gas station to fill up just their cars, but they are filling up liters and liters of gasoline because they know that if they don't buy it today, it's going to get more expensive tomorrow. So we can already see this cycle starting to play out. How can we protect ourselves from all the shenanigans that is going on right now? So first is commodities. Let's start with precious metals like silver and gold. Now this is very important. I hold just a little bit of it. And the reason why I hold it is if the US no longer is the world's reserve currency, the whole world would go back to the gold standard and use gold. I still want to be protected. The second commodities are more consumables. So you can think of oil, you can think of wheat, you can think of corn. But at this stage, we are already too late because of the crisis. All of these prices have already shot up. And the third one is battery metals. Now, I got this idea from controversial people like Kathy Wood and Chamath. Their macro perspectives are usually correct, and in fact, they have been correct for a very long time. But the problem is, just because you understand the macroeconomics, it is very difficult to build a product, fund, or a company that can really benefit off the macro perspective alone. But if you are a retail investor like me, then you don't need to wait for someone to build a fund that can manage all of this. Do it right now, do your research, and then you will realize that if you buy battery metals, not just now, but even just a couple of months ago, you would be making lots of profits. Second of all, big tech stocks. It doesn't matter whether the world is going to shambles or not. These companies, they are going to be here for very long. And inflation is just going to drive their valuations even higher. And of course, we also have defensive stocks. Not just utilities, but like defensive stocks. So the golden goose, that is Lockheed Martin. Now, last but certainly not the least is crypto. Look, crypto has been the best performing asset class in the past decade. And by looking at where the VC monies are pouring into, I can say with a good amount of certainty that cryptocurrency is going to be the best performing asset class for the next decade. But maybe crypto is not for you. Crypto may be a little bit scary because one day you can be up 1,000% and the next day you are down 50%. So if that is the case, here's some good news. You don't actually have to buy all these crazy, scary Bitcoin and Ethereum that could just dump 50% in one day. Instead, you can invest in stable coins where they are simply coins that are pegged one-to-one to the US dollar. It is incredibly easy for you to find any yield that is above 7%, which kind of just beats inflation. And you can even find some that holds a very stable 20% yield year on year in crypto. and that's Anchor Protocol. But the real question is it sustainable? So here's my hot take on it. I think that if the yield is between 5 to 12%, it is usually sustainable and it's very, very normal. In crypto, we are looking at how can we double, triple, and quadruple our money in 1 year. So paying 12% is nothing. But anything above that, I find the sustainability questionable. Look, but just because something is not sustainable in the long term doesn't mean you shouldn't take advantage of it in the short term. Inflation is high now, today, not next year, not 10 years from now. We don't really know what's going on then. So take advantage of what we have right now in the crypto space and just earn as much as you can. To put it into context right now, it's kind of when Uber first launched. They were paying people or giving out huge discounts if you were to start using Uber. And that's kind of the same right now with cryptocurrencies. People are willing to throw money at your face as long as you are willing to use their product. I hope this video helps you make better decisions, but none of this is financial advice. So remember to do your own research, and please subscribe, like, and comment below if you think this video is helpful. Peace out.